It's back. Look at the VIX, up over 8 percentage points here today, up 25% in the past 5 trading days. We have a lot to get into in this video here today, folks. Oh, do we indeed. VIX popping huge. VIX is volatility in the market, and usually you can think of it as when the market's tanking, when the market's going through a tough time, usually the VIX is going to pop huge. You can look back at pretty much every crash we've ever had, and the VIX popped huge in those situations, okay? And so we got the VIX coming back to life. It's been dead for quite some time. If you want to read up on exactly what goes into how the VIX is measured, pause the video right here and you can actually read the details of how the VIX is actually measured overall, okay? Now, the NASDAQ, if we go back to the beginning of this month, I mean, it was a straight up parabolic move. The NASDAQ moved like 1,000 points in a snap of fingers right up, right? And then since then, we've been straight down in regards to the NASDAQ, right? And these moves are crazy. Like the fact that it's about 1,000 point pop there and about an 800, 900 point drop here in such a quick amount of time, it's crazy to me because when I got in the market at the end of 2008, right? You know where the NASDAQ was back then? 1,500. It's over 10x'd since I started investing back in 2008. How crazy is that? And so when I see the NASDAQ move 1,000 points very quickly, I think back to when I first got in the market and the NASDAQ was, 1,500 points. Like, this is crazy to me, right? Now, the reason that NASDAQ has moved that much is because never in human history have we seen so many companies become so unbelievably successful and their business models go to places we've never seen and their business models be much more intelligently run than we've ever seen in history. You know, if I was to go back to the fourth quarter of 2008 and I told you that these companies here were going to become trillion-dollar, maybe even multi-trillion-dollar companies by 2024, I don't think anybody would have thought that was possible. Even people that were super bullish on the market over time, I mean, anybody that was back then, they would only talk about the crash. They wouldn't even be thinking about upside, never mind like $1 trillion market cap, multi-trillion-dollar market caps. That would have been thought of as impossible back then, right? Which kind of lets you, understand like, someday is going to be $10 trillion companies out there, and that's just something you got to understand, right? You have a stock like Honest down huge today after yesterday was up like 12%. Today it's down 7% plus, and even after this massive move down, the stock's still up 15.5% just in the past 5 trading days, right? And you think about the business model of that underlying company. I mean, diapers, wipes, cosmetics products, soaps, and lotions. Like what is going on? But the stock price is all over the place. I mean, look at the 2-year on this baby. I mean, look at that. One of the most vicious crashes into one of the most skyrockets ever, and then another skyrocket into another crash, into another skyrocket. Absolute volatility. You got Shopify looking like a snack out there. Think about how well the NASDAQ's done this year. And yes, Shopify has not been around for that ride. That stock is down 17% this year. It's just not having any fun. And you look at something like this, right? Cracks me up. I was looking at this here today. Analysts are basically talking about, they might only marginally beat their numbers, essentially, right? They're only tracking marginally better. It's like, okay, that's still great. Like, it's still better than expected. Like, that's phenomenal. Anything better than worse than expected is phenomenal. And by the way, you read through this here, and, it just shows you another reason why you should stick to investing and not trading in and out of stocks, because these people have data that you can't get. You know how they're tracking this? Through third-party data. So they pay for all these super high-end data platforms, and they'll pay $20,000, $50,000, $100,000 a month, if not more than that, for this exclusive data that they only have access to. And so if you're thinking about trying to trade in and out of stocks, just understand you're at such a massive disadvantage. It's not even funny. For investing, you're at like the biggest advantage. For trading, you're at the biggest disadvantage, right? And then you have a Palantir. We got a multi-year high on this one, right? I mean, this is the highest it's been, since like 2021? You got to go back to early 2021 to find the stock at these sorts of prices. It seems like the stock's addicted to going up every single day. You see things like this here today. Can Palantir stock hit $50? One analyst cheers the new bull case. Oh my gosh, right? Absolutely phenomenal. We got folks jumping on this bandwagon. Chris Patel, who's an absolute beast on X, he says he's not betting against Palantir anymore. He's closing out. And so he posted that a few hours ago. I saw that. I thought that was very interesting, right? You have Joseph Carlson, an absolute beast on YouTube. Look at him. He's saying he sold out of his Chipotle position, right? Sold out of Chipotle. So you got folks making all types of moves. We're in that sort of market now where people are making lots of moves, right? So in this video here today, let's talk about what I'm cashing out of, because I'm cashing out of something. I think it's a starting process, let's call it that. And so we'll speak about that while I'm doing that, okay? The second thing we're going to speak about here today is we're going to talk about some money-making opportunities in this market, because there is a lot of money-making opportunities in this market overall, okay? Appreciate y'all joining me as always. Thank you so much for being here. Every single person that smashed the thumbs up button, every single person subscribed to the channel. I appreciate each and every one of you. Look at this. Look at this. Man, I wanted to take a screenshot at 733,333 subscribers, but you know what happened? I forgot. I meant to check when I woke up, and I bet you I would have been able to get it, but anyways, I missed my opportunity. So, hey, private group, that's going to be the pinned comment down there. If you're looking to apply to join my private group, you can go ahead and do that, okay? Alrighty, so Chipotle stock is down 23.5% in the past month. This stock is in a complete free fall crash now at this point in time, right? And Wall Street's trying to save this. They put out this here today. While Chipotle isn't immune to consumer spending pressures, it should benefit from continuing traffic momentum and sales outperformance through 2024, UBS analysts say. So they're trying to save this publicly, right? And they're trying to pitch this as, it's fine. But clearly behind closed doors, they know of problems here, right? Remember, I told you these folks have access to all this types of data that really, I'm just going to be honest, you can't get. And so unless you have ridiculous sums of money, they know things are going bad at Chipotle. This stock is making that's too much. The stock is going down so much, so fast, it's in total free fall. They know something. If you just see a stock go down a little bit here, up a little bit, no, nothing, right? If you got a fundamental change in a business model, okay. But when you have a stock that you haven't got any news yet, but the stock's in complete free fall, somebody knows something here in regards to Chipotle. That's what I'm going to say about that, right? And my guess is, back in May and June, you had a massive publicity problem, right? That happened for Chipotle. Back in May and June, everybody on social media was talking about Chipotle skimping on customers. It went viral all over TikTok, Instagram, YouTube, the platforms everybody uses, right? I mean, I think even Shane Dawson did a whole documentary on kind of if you basically order from the app versus going in store and using your phone and recording it. It was a huge difference in terms of the size you got for your burrito or your bowl and things like that, right? And so this is a whole situation, and my guess is it's starting to reflect in numbers, and I don't know how they're getting the third-party data. They may not be able to get straight-up Chipotle data, but they could be getting data from maybe, I don't know, let's say Chipotle uses some third party to make their tortillas or something like that, right? Or third-party data in terms of how many tomatoes Chipotle's ordering per location in a specific city. Wall Street will find their ways to get this sort of data, right? There's probably something in the data these Wall Streeters are seeing, which is causing them to just relentlessly sell this stock. I mean, it's off a cliff right now. And that's an off-the-cliff move there, right? And so my guess is there's something going on there, right? And, it's interesting because obviously all this went viral on social media back in May and June, but it really started on the DL back in December, because a lot of people had been kind of complaining, but it hadn't really gone to public social media about Chipotle. Basically, the orders weren't being, the size was different, right, than it had used to be, right? And a lot of people had kind of been complaining about that in DL. And then back in December, this former Chipotle worker basically said that management's basically telling them to skimp on this. They're doing it on purpose, right? And it all kind of makes sense because you got to understand who got hired at Chipotle back in 2018. Brian Nicole, Mr. Nikola Jokic, he is Mr. Taco Bell, and he got hired as CEO of Chipotle, right? And so the reason I call him Mr. Taco Bell, by the way, is because he used to be the CEO of Taco Bell right prior to joining Chipotle, right? And so you got to understand he's going to bring over a lot of what Taco Bell had, bring it over to Chipotle, even though they're very different business models, right? And if you look, Mr. Taco Bell's done a heck of a job. Mr. Taco Bell's done a heck of a job. He's been at the company for over 5 full years, and look at the margins under Mr. Taco Bell. Look at that. Look at the gross margins. Look at the operating margins. Look at the net margins of Chipotle. Mr. Taco Bell's done himself a heck of a job at getting these margins up in a massive way. And guess what? Wall Street loves to see your margins going up and up and up. But as soon as your margins start to go the other way, peace out. We're out of here, okay? So you got to ask yourself, how can Chipotle get better margins, right? How does Mr. Taco Bell pull this off, right? Well, there's 6 ways you can do it if you're Chipotle. One is you pay your workers less money, right? You say you can no longer make $15 an hour, you're going to make $10 an hour. Can Chipotle do that? No. If anything, Chipotle's been facing a lot of wage pressure. There's just wage pressure in general out there, right? We're kind of in a little bit of a wage price spiral the last few years. Additionally, fast food establishments have been hit by a lot of minimum wage price hikes, because you've got to keep in mind fast food related work usually around minimum wage pay or just slightly over, right? And if you look at somewhere like California's moved to like $20 minimum wage for these workers now at this point in time. So Chipotle can't pay workers less. So if anything, that's hitting their margins negatively recently, right? Second, you could have less workers. Well, can Chipotle just magically put AI in all their restaurants? No. They need, if you're going to do big volumes, you better have a lot of workers on, right? Otherwise, those lines are going to get very, very long. So you can't really have less workers. So number 3 possibility is you can charge your customers more money. Well, certainly Chipotle's done that. They've raised their price several times over the past few years. We know that, right? So they've been doing that. That helps out margins. The 4th thing you can do is give your customers less food, right? Think about it. This is all a cost game, right? If, let's say, a Chipotle bowl usually costs $4.50 of actual food cost, right? And let's say a lot of that is made up of the meat that goes into the bowl, right? Well, if you put a little less in, then just a little bit goes a long way. If you put a little less chicken, if you put a little less steak than maybe you used to put, it can actually add up to a huge number when you talk about all the different restaurants all across the United States for Chipotle, right? And so actually, if you give your customers a less food, yeah, that can help your margins substantially. And guess what? Now that food goes even further. So let's say you cooked a bunch of chicken and that used to last 40 customers, right? 40 customers could get that chicken. Well, maybe now it can last 45 customers, right? Or 50 customers, which means you might actually not need as many employees in that situation, right? To cook as much chicken. And obviously the food cost is less. Now, eventually that catches up to your brand. And that's certainly the moment we're at now when it comes to Chipotle, right? It's starting to catch up to their brand. People are starting to talk about it everywhere, right? Now, the other thing you can do, you can bring down the quality of food. We know Taco Bell. I eat Taco Bell sometimes. Taco Bell's not good quality. We all know that. It's trash, junk food, right? Not good quality whatsoever. And Mr. Taco Bell could be bringing down the quality of food over time. Now, that's more subjective. That's a hard thing to prove, right? When it comes to quality of food, I can tell you personally, Chipotle's quality of food has gone down substantially over the years. If you ate Chipotle back in like 2014, 2012, oh my gosh, it was so good. Even my wife who, she's Mexican, so she was very anti-Chipotle. She's like, this is a Mexican food. And I understand it's not Mexican food. Chipotle's like its own thing, right? But even her, I even got to turn her on a Chipotle, and she even started to like it and crave it back in the day, right? You go to Chipotle now, I don't crave Chipotle at all anymore. Like, it used to be so freaking good back in the day. So my opinion is they've also brought down the quality, but once again, that's subjective. That could be a person by person. And if you didn't experience Chipotle back in like 2014, 2015, prior to the E. coli situation, I'm telling you, Chipotle was different breed back then, man. That was different. And the other way you can increase margins, you can upsell things like chips, guac, drinks like that, right? And certainly Chipotle's done that. Now, I'm starting to sell out my put options. So the keyword is starting. I sold some contracts here today. I sold 50 contracts. And these contracts, I paid about $1.28 for them. Now, these expire actually in June of 2025. They're a $42 strike, right? I was able to get $2.15 for those. Now, could I get more in the future? Potentially. Because I think there's a decent probability the stock goes into the 40s and maybe even below that, right? And so maybe I'm selling a little early, but I have a bunch of different Chipotle options, and so I'm looking to kind of get out of these. I've made a great profit on these, and I don't want to push my luck. If you make a lot of money in a very short amount of time, and it's a shorter term thing, a lot of times you can't get greedy with it. And although I do feel there's more downside here in Chipotle, I got to start taking some profits here. And so that's what I started to do here today, okay? Now, I still got a bunch of other contracts. I have these puts that are underwater right now, right? These are ones I got a little too soon. And so, if Chipotle keeps going down, obviously those will go from underwater to starting to make money and then a lot of money, right? And keep in mind, look at this. The move today in these specific puts were 38%. 38% here today, right? These ones I got in way too early here. These particular puts, right? It's a small amount of money, but I got in just too early. I was not expecting that blow off top Chipotle had, and I wasn't expecting the stock split. When they came out with the stock split, that really screwed me over in regards to some of those Chipotle puts, right? And so that caught me off guard. I don't think Chipotle has any more rabbits in the hat now at this point in time, now that they already have done the stock split, right? And then you look at this one. This is my big position. This is my big position here. Did the air conditioner just turn on? I need to shut that baby off. So this is the biggest batch of share of put options I have here in regards to Chipotle. This is a public account. These ones expire March of 2025. $63 strike on this one. And my thought around cashing these particular ones is if this baby goes into the 40s before they report their earnings, my plan is to sell half of those puts. So I have 20 contracts there, so I'd sell 10 of those contracts if it goes to the 40s before earnings, and then I would let 10 contracts ride into earnings. Now, if the stock goes into the 40s after earnings, I'm going to sell all my put options on Chipotle and just take the profit and move on to other things. I do think there's a potential if Chipotle really went south and if their guidance was really bad, I do think there's a potential the stock could go to the 30s, but I don't want to necessarily bet on that right now. I feel fine just if this baby goes to the 40s, like I said, I don't want to get greedy in this situation. I'll take my money, I'll move on, right? Now, if it stays in the 50s after earnings, I'll have to consider. I'll listen to a conference call, look at the numbers, and I'll consider kind of what I want to do in regards to that hedge there, right? Now, Chipotle has an issue, and they're getting a little more desperate with locations, and this is why also their margins could potentially struggle. They have the pressure of okay, if we don't give people a lot of food now, they're going to post it all over social media, right? So they're going to have to give a lot of people a lot of food, and that's going to hurt their margins. They also have employee wage pressure that's going to really start hitting them over the next few quarters, right? And it's going to be hard to go up on price right now if their demand is a little weaker, right? And then additionally, they're opening up these locations, but the thing I've noticed is they're getting a lot more desperate with their location selection. And, back when I worked at Quick Trip, I learned a lot about location selection and what it means to really pick a great location. A great location can mean the difference between your volumes being 30%, 40%, 60% higher than somewhere very similar to that area, but not quite the same location. It's a substantial difference, especially when it comes to, things like gas stations, food places, even pharmacies. I learned a lot from Walgreens about location selection, right? Walgreens always, they have mismanaged a lot of other things in their business over the past few years, but one thing they always did great back in the day is pick great locations, right? And, this really even hit me last year. They opened up this Chipotle in Arizona. I've seen so many, questionable locations recently in regards to Chipotle that I'm dang, they're starting to get desperate for some of these locations. But they opened one way out by me in the sticks, from my Arizona house, right? I have that Arizona house. It's in a guard-gated community out there. This is in the sticks, man. And I'm just telling you, they opened this Chipotle out there, and I'm I don't know if this one's really going to do very big volumes. Let's just call it like that. I'm this isn't it's not a very good location, in my personal opinion, for Chipotle. I look at everywhere around there. None of those places are really that busy way out there in Estancia. And by the way, I was looking at reviews also of that new location, 1.5 stars. Been to probably no less than 30 different Chipotles as I drive all over the valley for work. And by the way, that's what they call it in AZ. It's the valley, baby, okay? Worst Chipotle I've ever been to. Service was awful. If you place an online order, check everything you ordered before you drive away. This is the third time we've gotten home and our order was messed up. Terrible service. 7 employees on duty, most of them walking around, not taking care of customers. That's honestly what my experience has been at Chipotle over the past year or two whenever I went. It's just man, their service fell off hard in the past few years, right? And I tell you, it just wasn't like that. We go back 10 years ago, I'm telling you, Chipotle service levels were super high. Great employee force, and if things have changed there. And once again, Mr. Taco Bell strikes. Have you ever expected great service from Taco Bell? No, of course not. No. When you go to Taco Bell, you're I'm expecting the lowest level of service, right? The lowest level of caring about anything, right? And Mr. Taco Bell, he's working his wonder, right? And clearly they're not doing the training they used to do. Clearly they're not adding the higher level employees that they used to have. And clearly it's showing in regards to kind of what they have going on there, right? Now, if Mr. Taco Bell is striking, then guess what's going to happen? The P ratios of this company are going to go in line over the next 5 years with the Yum Brands and with McDonald's. That's what's going to happen over the coming years. Because if you're going to start to have the service levels that Yum Brands has and McDonald's has, if you're going to start moving your quality of food down, right? If you're, going to have all these sorts of dynamics that a Yum Brands or McDonald's has to deal with, right? Your valuation's going to go there over time, right? And so over the coming years, Chipotle's forward PE, 2-year out forward PE will move more in line with Yum Brands and McDonald's. And that's what you'll see play out with this baby, which is not going to be necessarily great news in regards to the stock price here, right? Now, in regards to a stock that's doing absolutely tremendous is Palantir, right? Palantir is just on a mission. I mean, the stock is on a mission. The company's on a mission. It's incredible, right? It seems like every time, and even with the NASDAQ getting weaker recently, right? Obviously, a lot of NASDAQ-related stocks have fallen over the past week and a half. And look at Palantir. Palantir's like, I don't care that y'all going down. I'm going up. I don't care about what y'all got going on, right? Now, you look at Palantir, and obviously Palantir trades at very high forward P. It's clear, right? 2-year out forward P, even 69 on this baby, right? Now, keep in mind, they could beat those numbers. We're taking into account on 1000xstocks.com here analyst estimates, right? So there's a decent probability Palantir could beat that forward P, could beat that 2-year forward P, and the numbers could be lower. But the moral of the story is here, right? Is people will look at the forward P, that 2-year forward P, and they'll say, it's just so expensive. The stock is just so expensive, right? And I thought I would address this on X here today. So I made this post on X. I said, Palantir stock has a forward P of over 80. That is about 4X the average stock in the market. Look at this. And I showed, a graphic of this on 1000xstocks.com, right? There are some things you must consider, though. 1, Palantir is expected to grow revenue and earnings per share at a dramatically faster clip than an average stock. 2, Palantir gets put into the more SaaS space, software as a service, and those stocks trade at much higher multiples than the average stock in the stock market. The reason is because these companies lock customers in for usually years or decades to go in the future once a customer starts using them. The business models are sticky. I said 3, Palantir is at the cross-section of data and artificial intelligence. I've been saying this since 2022, and if you've been watching my channel since then, you know that, baby. Now the world cares about an AI strategy, and there's Palantir perfectly positioned for this, right? And so, I could understand if somebody doesn't want to go out there and buy Palantir stock because they're like, valuation's high. I get that, right? But you got to continue to hold it. It's at the least a hold, right? And that's kind of the way I view this. In regards to Palantir, it's a very tough stock to try to time out. I've read so many comments over time. Thank goodness not in the private group. The private group, a lot of those folks in the private Discord chat and whatnot are phenomenal about, they just hold Palantir and they add shares here and there, but they hold, right? But I've read plenty of YouTube comments, plenty of people on X that, I sold out, and this is over the past year or two, I sold out of Palantir at 18, I think it's going down. I sold out at 22, I think it's going down. I thought I sold out at 24, 16, and I watch people sell, and ultimately the stock just goes higher and higher and higher. And when you own a truly great company, you got to let it do its thing, and you can't time it out. Like Palantir could move to 50 for all we know, right? And then it has a big crash. And so what does it crash down to after it moves to 50? 30? Like think about that for a moment. So you sold out at Palantir at 18. You're like, I think it's going to go down to 16. I think it's going down to around 15. And then Palantir doesn't go down. And it goes on a run to 40, goes on a run to 50. And then you're like, Then it has a big crash all the way down to 30. And then you buy in. Great job. You sold at 18, you bought back in at 30. Congratulations, Steve. Okay? And this happens all the time in the market. That example I just gave you, it happens on an every freaking day basis in regards to the market, in regards to these great companies. Where people sell out, then they're like, it's got to go down. I think it's going to go down. I get scared, whatever. And they end up buying back in later on at a much higher price than what they sold out. And they added a bunch more stress because they watched the stock go up and up and up, and they're like, oh. And then even worse, I don't know what happened in my video feed there, even worse, sometimes they never get to buy back in. That's the worst case scenario, right? Because let's say Palantir then goes to 50, then goes down to 30, and they're like, it's not just going to stop at 30. It's going to go all the way down to back to my price I sold out at 18, at 20, at 22, and then it never does, and they never get back in. They always miss that opportunity. Then they turn into perma bears, as we know, right? Shopify, I love it. I swear that I love it. Oh my gosh. Okay. 17% down so far this year. And Shopify is just looking very, very attractive. Now, I did a very in-depth video on Shopify about 5 months ago. And that one is a 27-minute video. It just dives into Shopify, going through the business model, going through why I like that stock so much. If you never got to watch that video when it came out 5 months ago, and you're interested in Shopify, definitely watch that. I think it's a good watch there. Okay. Now, when you look at Shopify, and this is another one that trades a much higher multiple than the market, right? We can say, forward PE, you kind of expect 18 to 20-ish in the market usually. Shopify's about 3x at 63, right? But look at the earnings per share growth. The current year expected earnings per share growth, 700+%. Next year earnings per share growth is over 100%, triple digits, back-to-back years. Then you look at the revenue growth. Trailing 12-month revenue growth, 25%. Current year expected revenue growth, 22%. Next year revenue growth, 20%. What are we doing here? That's a special company. If you can get a company that's growing EPS at a triple digits and a company that year in and year out is growing revenues 20+%, you got a special company there, right? So yeah, sure, it trades higher than the market trades at as far as PE ratios, but guess what? It should. Because the average stock doesn't have these sorts of growth rates. No. The average stock doesn't have this sticky of a business model, doesn't have this level of pricing power over the coming years, right? And that makes Shopify very, very special. Now, the next thing we got to keep in mind is the time period we're going through. So we're in July right now. I'm recording this video in July, right? Guess what? July is one of the best months in the stock market typically. Now, keep in mind, the typical does not mean always. Sometimes you're going to have freak situations. You're going to have a July where the stock market does very poor, right? And it's interesting because this month started out phenomenal. It started out phenomenal as far as stocks went, and then obviously recently down, right? But keep in mind, if we have some strong earnings here over the next couple of weeks, you'll see July was another great month for the market, and things will come right back, right? But do keep in mind the time period we're about to go into, August and September. August and September are typically bad months for the stock market. Could I see August and September being bad? Well, yeah. I mean, if we have big tech come out, report great earnings here over the next couple of weeks, and the market's flying, I think the market could set up for a downdraft in August and September, absolutely. And you're going to have a lot of stuff being talked about. A lot of political related stuff is going to be talked about, right? A lot of fear, a lot of worry about this, about that. And it's usually just a weaker time in the market in general. So I could definitely see, some sort of sell-off there and some great buying opportunities. I mean, we're already seeing great buying opportunities, but I think we could see even better in that kind of August, September timeframe, right? And so, the thing I'll say is if you don't know what you're doing in the market, you better get knowing. When I say if you don't know what you're doing, I'm talking about if you don't know how to value stocks, if you don't know income statements, balance sheets, those sorts of things, like it's the time to take this serious because we already got a lot of opportunities in the market. If you get more opportunities in August, September, you got to learn how to identify the best opportunities. Because the difference between, let's go back to 2022, right? I'm buying stocks like Meta, stocks like Palantir, right? Stocks like Amazon, like great companies that were hugely discounted, right? And look at the way those stocks have performed. Absolutely tremendous. Let's say instead of that, I didn't really know what I was doing, so I was buying maybe an Apple, right? Which has Apple stock done okay since 2022? Sure. But has it been Meta since 2022? Has it been Palantir? No. Has it even been Amazon? No, right? Let's say I was buying, the hot stocks at that particular time in 2022 were oil and gas stocks. Let's say I was like, you know what? I don't really know what I'm doing in the market. The Wall Streeters are all talking about buying oil and gas stocks right now. So I'm not going to buy Meta because they're not buying Meta and they're not buying Palantir. So I'm going to buy oil and gas stocks. Do you know what my returns would look like right now if I had been buying oil and gas stocks in 2022 versus buying Palantir and Meta and these other companies, right? Oh my gosh. Be horrible. My returns would be trash. And so that's the difference between knowing what you're doing in the market and not knowing what you're doing. And it completely changes your financial future. It completely changes what your net worth goes to. It completely changes the house you can afford, the cars you can afford, all those sorts of things, the vacations you can go on. There's a huge difference. Between the sort of vacation you can go on, and I've seen kind of the levels of vacations, and there's different levels to that, I can tell you that. I mean, everything can change. And so that's why it makes sense to, when you're in these sorts of time periods, you better learn how to play this game, man. You better learn as much as possible, because if you don't know how to value a company, if you don't know income statements, balance sheets, cash flows, all these sorts of things, it's going to come back to bite you in a massive way, and you're going to look back and be like, oh, why was I buying these stocks when I should have been buying these stocks, right? Very important to understand that. Now, looking at kind of next hedge setup, it could be some of these home builders. I'll be honest with you guys. Now, I had been trying to play some puts in regards to a toll earlier. I had to get out of those ones. It wasn't working out. I played it a little too early. The setup in this back half of the year could be much more attractive. And the reason being is now we're in a situation where I think a lot of these home builders are screwed either way. Their stock prices have gone to all-time highs. They're kind of in that blow-off-the-top stage. And, if they continue to kind of report good numbers, good guidance, everything's great, I think they're all going to have this like blow-off top over this next few months, essentially, okay? Kind of like a Chipotle type situation, right? Where they go to insane all-time highs, and it's like, I can't believe these stocks are trading at these sorts of valuations, right? But I think they're kind of set up in a very bad way over the next couple of years. Rates dropping is actually not going to be good for them. That's going to loosen up existing inventory, in my opinion. When existing inventory gets loosened up, that's going to take away a lot of the advantage of going with these new home builders, right? Which has been the thing over the last few years. And then additionally, if the economy tanks, right? Let's say we get the tanking of the economy. Let's say we get unemployment to go up substantially over the next year or two. We know that's not going to be good for the home builders either, right? So my opinion is, either way, it's not a great setup for the home builders, especially being that these stocks are all at all-time highs. And if they take another leg higher and have a blow-off top scenario, which is certainly possible, like I showed you with Chipotle, where it's just like, whoa, we already thought these stocks were high. It just went to the next level. We know this industry is cyclical. These aren't companies that grow to the moon. This is not a Palantir. This is not an NVIDIA. Even NVIDIA doesn't grow to the moon, right? This is not some software company that they can just keep growing year in and year out, 10% a year, 20% a year. This is no Shopify. This is no Amazon. And so for these sorts of companies, they go through these major up cycles and then major crash cycles, right? And usually the best time to go against these stocks is when everything looks absolutely great. And it's like, oh, rates are dropping, our stock's at all-time highs, we're feeling confident about the remainder of the year, we're feeling confident about the future. That's usually the best time to go against these stocks. And usually the worst time to go against these stocks is when things look bad. That's actually the time, especially for a lot of these cyclical stocks, that's you actually want to look at potentially playing upside. Like whenever the next housing demise happens for home builders, there'll be a time I'll be looking at Toll Brothers from kind of a buying angle, because it'll be at a very, very different price than this. I can tell you that much, guys, okay? All right, appreciate everybody joining me. If it's time for you to start taking investing serious, you can apply to join private group. There'll be pinned comment down there. Just last week, I signed up 2 seven-figure club folks. 2 folks in my private group hit 7 figures. And then we had 10 people last week hit 6 figures plus in their portfolio. So yeah, if it's time for you to take your game up to the next level, pin comment down there, fill in an application. We'll see if you're a good choice to join us in the private group. Much love as always, and have a great day.